Hey, I'm Dr. Carolyn Edwards, and welcome to Get Your Life. This is the show where we're talking about all things to help you live your best life now. And the reason you need to live your best life now because everyone else's life is taken. All right. So today we are talking about real estate unraveled, how to buy a house. We have an amazing guest, Mr. James Bunyan. He is a broker and realtor and owner of Millennium 3 Realty. Let's welcome Mr. James Bunyan. Woohoo! Come on, Mr. James Bunyan.
Thank you for having me. Thank you for having me, Dr. Carolyn.
All right. I'm so excited that you took time out of your busy schedule to come and shed light on the home buying process, because for many people, they're scared.
Very.
Many people, it's too much information. They get lost in the weeds and all the information. So today we want to break down how you can buy a home and how you can do it without a lot of stress. All right?
Okay.
So before we get into that, one thing I always tell people is you want to do business with people you can trust.
Correct.
You want to do business with people that are passionate about what they do. So tell us a little bit about you and how you got into real estate brokering.
Well, again, thank you for having me today. I've been in real estate since '96.
Ooh, that's a long time.
I know I look like, I'm not that old, but but yeah, I've been in going on 30 years, as a matter of fact.
Wow.
I have my own company since 2003.
Wow.
And what really got me started, and when I first started, most people get into real estate, they got a sphere of influence to get business fed to them. And when I first started, I didn't have that. My friends weren't buying homes and things of that nature. But then I tapped into the affordable housing niche, where I saw there was a lot of good programs out there, and I know the information was overwhelming for most people. So what I try to do is, educate myself on those programs to make sure that it becomes easy and accessible to the average person, not that because let's face it, we get overwhelmed with so much information on a daily basis till we go into analysis paralysis.
Yes.
We'll see all this information, our eyes are glazed over, and just figure, okay, this is not for me.
Yep.
Which I understand. And a lot of programs that may look one way, you sit down and it may not be for you. The key thing is to find out what fits you.
Right.
I mean, financing is like a fingerprint. Everyone's is different. So whatever your particular situation is, family size, income, that's going to determine what's your best route to take. So, again, first-time home buyers, that's what I've been working with since I first started in real estate. Right. I also help, the people that's moving up, investors, but my passion is with first-time home buyers.
Okay, so then you're on the right show, because we want to help people that need help, that are a little bit afraid of the enormity of the process. Some of the words we don't understand, so hopefully by the time we finish, people feel like they're in the living room with us and that they are comfortable enough, even after the show, to post some comments, to ask you questions, to call your office.
Absolutely.
That's what this is all about.
Absolutely.
Okay, so thank you for that. Our questions really go into some of the things that scare people away from buying homes. But one of the great things about buying a home is that you building wealth, not only for yourself, but for your family, because as you buy a home, hopefully it appreciates in value, and then you can use some of that value to do some of the other things. But people are saying you shouldn't buy a house. This is a bad time. It's a bad market. So tell me, is this really a good time to buy a house, or is it better just to rent and wait it out?
What I've always told people is the best time to buy is when you're ready to buy.
Okay.
If you're in a position to purchase, you need to find out what your buying power, what your affordability. In order to do that, you need to speak to a lender. Lender's going to look at several factors to determine if you're ready to move forward right now. They're going to look at your income. They're going to look at your debt. They're going to look at your credit. They're going to look at your savings to see if you have enough to put down to purchase a property. Now, a lot of people, they assume that, oh, my credit is bad, I'm going to wait. Until you know exactly where you're at credit-wise, it's not going to improve. So it's just like I always say, I always like to use the analogy, if you're taking a trip somewhere, you're going to use a GPS or Google Map. In order for it to determine to tell you where to go, what's the first thing it needs to
I
determine?
had a location. Where am I going? Right, the address.
See, people think that, but
Well, what's the first
they
thing?
need to figure out where you're at right now.
Oh,
Without
okay.
knowing where you're at right now, they can't tell you to turn left, turn right, go straight.
You're so right.
You have to find out where you're at right now. A lot of
Okay.
people don't realize that maybe they're just 2 or 3 steps away from being eligible to purchase a property. So the key thing is find out where you're at so you'll know what you need to do next. You can't just assume or wait till things get better, because a lot of times by the time it gets better, everybody's rushing back into the market and it's
Right.
competitive again. So again, the best thing to do is find out where you're at now, and the best time to buy is when you're ready to buy. And believe it or not, we're currently in a buyer's market.
So what does that mean?
Basically, a buyer's market is this. When there's more inventory than it is buyers, then they have a pick of the litter as far as,
Okay.
these properties have been sitting for a while, the sellers are motivated, we can negotiate a good deal. When it's a seller's market, that means the inventory is very low and it's a
Okay.
lot of buyers out, then that's when you run into competing bids.
Okay.
Right now, prices are historically high, but, list price is at one level. Like the median sales price and list price in Dade County on single-family homes is around $597, but the average sales price fluctuates between $530 and $560. So they may be listing high, but when it settles down, it's a lot lower than what it's listed for. And when a seller is motivated, they're willing to pay some closing costs and
Okay.
bring the price down. So that puts you in a position to offset your out-of-pocket to purchase a property. So
Okay, so the seller's going to give me some money to
If-
help buy something.
if they have the equity to do it. Now, anyone that bought before COVID, their values had literally doubled since COVID. If they bought after COVID, their margins may be a little tight. And one key thing to look at is this. If you're out there buying a property and it's someone that has, had the property for years and there's enough equity in there, then they're in a better position to try to, pay some of your closing
Right,
costs because they
right.
have significant equity in it. And I've done deals where they came down on the price and paid money towards closing costs.
Wow. Okay, that's a good situation to be in. So let's go back to what you said. The best time to buy is when I'm ready, and so I need to know if I'm ready.
Mm-hmm.
So what things should I look at? Like you said, money in the bank,
Mm-hmm.
my credit score, do I have enough money? Do I have a lender? Like, what's the first thing as you're telling someone if they're ready?
Mm-hmm.
Is it the money in the bank? Is it the credit score? So what should I work on when I prepare myself to know if I'm ready?
It's all relative to what your desires are. Some people may be able to qualify for a high-end home, but they want something smaller that's manageable. Maybe they want a condo or something. So the very first thing is to determine, okay, what's my credit look like?
Okay.
Now, technically, you can get FHA finance with a credit score as low as 585, believe it or not. But you won't qualify for the programs that will offset closing costs and down payment, and the interest rate may be a little bit higher, and the lenders may require a slightly higher down payment. So you can have a credit score that low, but the stronger your score is, the better your rate's going to be and the more access you have to funding. So once you talk to a lender, your credit where it needs to be, they're going to look at your income versus your debt. Because I've had clients before that made $10,000 a month, but they also had $7,000 a month in expenses.
Okay.
So that money that was left over wasn't sufficient enough to be able to afford the house that they want.
Okay, got it.
So not only income, but your debt plays a heavy role in determining your affordability. Now, if you don't need any assistance, you say, look, I got my money together. What you typically need on an FHA financing, FHA allows you to put just 3.5% down plus closing costs.
Okay, hold that thought. So I need 3% of the house price, the sales price. So I need that cash.
Well, FHA 3.5%.
Okay, 3.5%.
Correct.
So if I'm going to buy a house that you said the average was 500 and something, see, this gives the listener and the viewers an idea. So all you do is put the 500,000 with the 3%, and then you start thinking in your mind, okay, this is how much cash that I should have on hand.
Correct.
And then let's go back to the credit score. So now we hit the cash part. The credit score, you said as low as 585.
Correct.
What's a good credit score?
Well, lenders typically want to see scores north of 680, low 700s. The maximum credit score is 850. You know, that's a supreme credit score. You pretty much write your own ticket.
Okay.
But you can get financing 620, 640. The terms may be a little bit different. You may have to pay a few more points in closing costs as a penalty, or you may have to put more of a down payment down. So it's a sliding scale depending on the lender, what it's going to cost you.
Okay.
Typically with FHA finance with a 3.5% down, closing costs run about 4% of the purchase price. So let's say, just using round numbers, you want to buy something that's $500,000, and let's say the 3.5% for the down payment plus the 4% in closing costs,
4%.
you're easily looking at $35,000 to $37,000 that you need out of pocket to purchase that property.
Wow. Okay.
Now the good thing is, there are programs that can assist you. A lot of people think these programs are for the poor or the people that are struggling and can't afford anything. But you could be a single individual and make up to $96,000 and still have access to these funds. You could be a family of four and the household income could be as high as $150,000 and still access these funds. So once you determine what your savings are, then if you at least just have the down payment, you may be able to qualify for some of these programs will offset the difference, or we can negotiate the seller to pay some of your closing costs on FHA financing. FHA will allow the seller to contribute up to 6% towards your closing costs. And that's a huge, that could be up to $30,000 that a seller can contribute to you. Again, it comes down to the seller have that type of equity and how motivated they are, but there are a lot of motivated sellers right now.
Okay, so now let me go back. You have to have your cash. You need to have your credit.
Correct.
And then I heard you say FHA, you're talking about the loans now. So that means I have something to put down, and then I have my credit right. So now I'm going to look for a loan, and you said FHA. Now, what's the difference between, and I know it's a conventional, right?
Correct.
Okay, so tell us the difference, and why would you want one or the other?
Okay. FHA have more lenient guidelines.
Okay.
Meaning that FHA loan will allow your credit score to be lower to 585.
Okay, got it.
Again, you're going to be a higher interest rate. You have to put down more of a down payment, and your ratios may be a little bit tighter because now it's a risk because they see that your credit score isn't where it needs to be.
Okay, got it.
Conventional loan, you have to have a more enhanced credit profile, a higher credit score. Is more of a down payment. There are some 3% down conventional product, but most of them are 5% and up.
Okay.
But that's determined by your lender. If your credit is strong enough, you do get better terms, and if you have the funds available to put down the 5% plus closing costs, usually economically is a better deal because you're putting down more money and the rates tend to be a little bit better. So conventional, you need at least 5% or more as a down payment.
Okay.
FHA is 3.5%, but again, they may have a few more fees associated with it. And another thing with FHA, there's a thing called mortgage insurance that you have to carry the life of that FHA loan. Normally, mortgage insurance can be dropped once you owe less than 20% of the original loan amount and the property value. But with FHA, as long as it's an FHA loan, you got to carry that
whole
insurance.
time.
And that could be an additional $200 per month that you're really not getting credit for. You're just paying that hoping that, that you don't have to use it because that really protects the lender, not you.
Right. Okay. So now I have my down payment. I fix my credit. I know I have some items that maybe the seller would pay for, like my closing costs. So then I'm going to look at my loan. Am I going to get FHA or I'm conventional? But at least I know with FHA, I may not have to put as much money,
right?
Or I may get more assistance.
Correct.
Okay, so now I'm on a good street. I know where I'm at now, right?
Right.
The next question is, and I hear people say it all the time, my car is going out. I want to get a house, but now I need to determine what other things should I buy. If I start buying things, is that going to mess me up for my house? If I buy a car, is that going to mess me up? Should I wait to buy any big thing until after I buy a house?
The short answer is absolutely, you need to wait.
Okay, wait.
Because when they qualify you at your current debt to income ratio.
Okay.
And if you're going to increase your debt by $500-$600 with a new car, that brings your affordability down. You may have qualified for a $550,000 home, but now you got a new car note. That may bump it down to $475,000 and takes you out of the market of the property that you really want. And let's talk, if we can we talk about the programs that can help offset some of the closing costs and expenses. Again, it is also income driven, but some of those incomes are relatively high, especially like Hometown Heroes. You can make over $146,000 still qualify for that 5% assistance, which is in the form of a loan, but it's not paid back until you pay off your first loan, and it's at 0% interest rate. That's one good program.
So that means you get two loans.
Correct.
You have a first and a second.
Correct.
Okay. And Hometown Heroes, tell me what that means. Do I have to be like a firefighter or a policeman or? Initially,
that program started off as that. Now there's over 95 qualified professions in Florida that qualifies you to access those programs.
Okay.
So
like a teacher.
The teacher, I've seen any licensed professional that their business is based in Florida, you may very well qualify for it. And all programs are created differently. There's some that you have to pay back simultaneously with the loan. There's some that's forgiven at a certain time, and there's some that just added on as a deferred loan that you have zero interest that you pay at the end of the loan. The beauty about that is a lot of people worried about, it's a second loan, I got to pay this back. But historically, prices on real estate have always gone up. There's been periods of time when it dipped down, but then all of a sudden it shoots back up. Because just like right after the crash of 2008,
that was me.
Houses were selling in certain, let's use like Richmond Heights, for example.
Right.
I've literally saw properties in there, foreclosed properties and resale properties, selling from $75,000 to the low hundreds.
Wow.
Right now, today, I've seen average sales prices in there, $500,000, $600,000, $700,000, there's even $800,000 sales in there. So it may dip down momentarily, but it's going to go back up.
That happened to my husband and I when we moved from Washington, D.C. here. Everybody told us it's not a good time to buy. You're not going to get a loan. We had property in another state, but I like the quote that somebody says, buy the worst house in the best neighborhood.
Right.
And you're absolutely right. It did dip down after we purchased. It went lower than what we purchased, but we're still here and it's come back up a lot. So you're saying basically don't sell. If you don't have to, hold on to it.
Correct.
Hold on to it. So what about, I want you to tell me about the Economic Advocacy Trust Program. Don't they have a home buyers? Yes. Now tell us about that, because do you have to pay that back? I don't think you have to.
You do. That's a Miami-Dade Economic Advocacy Trust. They have a home assistance program where you can get anywhere from $12,000, $14,000 up to $28,000 to offset your out-of-pocket expenses. There is a
first-time home buyers only?
Well, technically, yes, but as long as it's your primary resident that you're using the funds for, you can utilize it for it. So if you have a property somewhere else you had and you're not living in it, then a lot of programs are allowing you to use those funds to purchase a property if it's going to be your primary property. And there is a repayment component to it, but it also is forgiven after a certain amount of time, which most programs are forgiven after a certain amount of years because it's structured for homeowners, not investors.
Right.
If they would have been, just give you the money as forgiven, that'll open the door for a lot of investors to come in and be in and out. So they try to be strategic and make sure that this is going to be a primary home. And if you sell it before a certain time frame, then you have to pay that money back.
What's the average time? 5 years, 10 years that you have to stay?
10 to 20 on most of the programs.
10 to 20, okay.
So when you're talking to the lender, as we talk about lenders, not all lenders are created equal. There's some lenders that don't access these programs, and there's some lenders that access all the programs. So me as a realtor, I always try to put my client in contact with the lender that I know that have access to all the programs.
That's important.
So that way they could look at their credit profile and income and say, okay, you qualify for this, we can get this. And the beautiful thing about these programs, you could layer them. I've done deals where you could layer 2 or 3 programs on top of each other.
Oh, wow.
Let me give you this one example of a homeowner I helped in Homestead.
Okay.
He had 2 jobs. He was a security guard and a janitor. His affordability, just based on his income, was just $126,000, and we know there's nothing in Dade County you can find for that amount.
No.
We were able to find him a property in Homestead that was a little bit under $300,000. He was able to tap into the program with the lender I sent them to be able to get an additional $160,000 in subsidies to add to his affordability to be able to purchase that particular property in Homestead. It was a 3-2 condo. Factoring in his credit, the HOA, the mortgage, and everything else, his payment was still around $1,400, which was manageable for him.
Right.
So think about it. He, by himself, all he qualified for was the 126.
The 126.
But with all the program layered together, he was able to get a loan up to $280,000, and he only had to come to closing with 3% out of pocket, which is a little bit over $7,500.
Wow.
So again, there's more paperwork. There's more of a process to go through these programs. That's
worth it.
But it's important that whoever you choose to represent you in these transactions, they're knowledgeable with the program, because you have to explain these programs to the listing agent who represents a seller. A lot of times the listing agent are clueless about these programs. They'll see it, since they can't explain it, they'll encourage the seller not to entertain it. So it's important the team you put together as a first-time home buyer, that they work with a good lender, understand the programs, and even have a good relationship with the title company and everyone else. So that way, once everything starts moving forward, you have somebody you could rely on to hold your hand and walk you through the process.
Well, I love that what you said, because what people don't understand is you're getting paid throughout this process. So essentially, you're working for the person that you're helping to get a house.
Correct.
So sometimes we are afraid to ask for some of these things. Maybe we don't know, but maybe we're afraid. But I like what you said. You can ask for your realtor to be knowledgeable in these programs. Like, I have never heard of someone that layered programs. I thought once you did one program that you were done with your program. But now you're saying you can layer. So as we go back, you need to have your money. You need to have your credit. You need not to buy anything big, because we don't want to lower your credit. You want to pick the right realtor, somebody that's knowledgeable and knows the areas and knows the programs, right? Okay, so those are all the things Go ahead.
Let me tell you about some of the programs. Okay. MD, which is Miami-Dade Economic Advocacy Trust.
Yes.
They got the fund from $14,000 to $28,000. Housing and Community Development, they have funds as well too. That's another county agency. And they have 2 different loans set up where you can get $35,000 and $80,000. That's a potential $115,000.
So you can get both if you qualify.
And other municipalities like the city of Miami, they have funds up to $200,000.
See,
that they can give.
The right
Homestead,
man.
There's a CRA program, you get $10,000. So there's a lot of programs spread throughout the county that makes purchasing a home a lot more obtainable. But the person that you work with or represent have to know these things. And there's another thing that's kind of like have people weary getting into the market, because there's been some recent changes where it's a possibility the buyer have to cover the realtor's commission. Now, before it was the assumption that once the property is listed, the seller's going to pay.
The seller paid, right.
In my experience, you still have to make sure that the buyer knows is a possibility
that that's
an expense they have to incur, so they have to have a buyer's broker agreement.
Right.
But before we even enter into a contract, most realtors have been very good as far as disclosing if the seller is compensating the buyer's agent, so that way that buyer know before they even move forward
that they don't have to pay that.
Exactly. So that's important too. That's need to be negotiated up front as well. But I've yet to see where my buyers had to pay my commission, because the seller understands the process and want to get the property sold.
So one of the things that scares people away too are these bidding wars, especially like in the Miami area. It's like we're up against the investors.
Right.
So is this realistically I love all the programs, and I like the example that you gave the young man at Homestead. What's is it a 50-50 chance that we can get something? Like, how competitive is the market? Who are we up against?
Remember we talked about earlier a buyer's and seller's market? When there's a seller's market, that's the high probability of getting into a bidding war.
Okay.
So right now, we're not in that situation because a lot of people are afraid to go into the market because of the fact that there's a lot of uncertainty, even with jobs. Like I have one client I was talking to, they say, well, I'm not certain what may happen with my job, so I think I feel more comfortable renting for now. Let's take that scenario. Say, okay, you're uncertain about your job, so you're going to go ahead and renew your lease. And let's say you do lose your job. Then that landlord has a legal ability to evict you within 90 days.
Wow.
But let's say you say, okay, I'm going to move forward, I'm going to purchase me a property, and you end up buying a home. And the same situation, have you lose your job. Now, the banks aren't in the business of real estate. They're in the business of lending money.
Right.
They don't want to come take that house from you. They want to work with you to try to figure, okay, how can we make this better moving forward?
Right.
They could do a loan modification. They could do forbearance. It's multiple things they could work on. But the main factor is this. If that same scenario happened, if you're renting a property, 90 days, they can have you evicted. If you own a home, I've seen foreclosures legally be able to drag that for up to 2 years till a resolution was found out, then they was able to stay in that home or liquidate it. They was able to walk away with a little money because the property kept going up in value, so they at least have some money to move forward. So the argument to wait until the market get better before I buy is an argument that's not good also. And also people say, I want to wait till the rate come down.
Right.
Let's say that if you buy a house today, let's say at 7% interest rate, and it's a $400,000 property, and you get your principal interest, your payment is set at a certain amount. But let's say, no, I'm going to wait for a while till that rate drop. If the rate dropped to 6 3/4, okay, I want to buy now because it's a 1/4% lower.
But inventory may be gone.
Exactly. So it may create a bidding war. Now everyone's rushing into the market.
Right.
And even if you're paying $10,000 or $15,000 more for that property at the lower rate, your payment would actually be higher at the lower rate because now you're paying more.
Right.
So that reduction was a wash. So to time the market is not going to really work out in your favor.
Okay.
Because
so that go back to when you're ready and not trying to gauge the market, because you are absolutely right. We're all trying to get a loan when when the money is cheap. We all want to get a loan when the money is cheap.
And there's a saying, they say, when people are greedy, be afraid. I mean, if the money, if everybody want, okay, maybe you need to back off. When people are afraid, that's when you become greedy because now everybody's afraid on the sideline.
Right.
So that's the time to go in and negotiate a good deal. And okay, another example, someone said, okay, what if I buy now a house for $500,000 and it drop, let's say 20% next year. So the $500,000 property you bought may drop to $400,000. The good thing is you have that property, you're locked into that property, and no one's going to come kick you out.
Okay.
The other benefit is this. If that value drops, that means when they reassess that property, your taxes are lower now. That means they have to lower your escrows, and your payment going to be lower too. The same thing with the insurance. If it's a lower value property, they can't overinsure. So now you have the benefits of having that home, and now your payments are going down.
Right.
And with your property tax, if it's a homesteaded property, even when the values go back up, they can only raise it 3% a year. Okay. So they can't jack it back up to where it was before. They had to slowly, gradually raise it up.
Good.
So it'll still put you in a good position moving forward because no one's going to come knock on your door and say we're raising your rent, or the landlord not going to come say I'm selling this property.
Right.
You still got control and stability in your future.
And those are some good points that you made. When you rent as a landlord, if we want to sell, then you have to go find another place to live. Or if the landlord, if our costs go up, then the rent's going up. If it's possible to raise the rent. But I had a question. Okay, I want to buy a house. I'm currently renting.
Okay.
So what do I do? Do I wait until my lease is up and try to find, if I haven't bought a house yet, so should I get something smaller and cheaper, or should I just go see if I can go back home to mom or stay there? Like, what realistically, as I'm waiting to buy this house, what should I be doing? Renting, trying to go get a little apartment or a little room? What should I do?
It goes back to what we talked about earlier, knowing where you're at right now.
Okay.
If you have the savings and you have access to the funds to be able to close on the property, you know that saving additional money is not going to be a real issue where you feel like you got to go back home and live with mom until you save up some money. So it allows you to make that decision. it's the best thing to do is start looking now to see what's available out there. If you see a great deal that you cannot pass up on, that's just once in a lifetime, you have 4 or 5 months left on your lease, you know, you may want to explore, okay, what is the penalty for breaking the lease?
Okay.
You may say, okay, I got to sacrifice 1 month of rent, as long as the landlord can rent it back out. So at least you'll have options, so you'll know what's the best decision for you based on your current situation.
Right. That is so much information, and we tried to make it as easy and simple as possible. But we're going to have a part 2 because we have to talk about VA loans. We have to get back into the FHA. We need to get back into the conventional loan.
Right.
So I thank you for coming. But one parting thought or information or just some last words so that we can get started and moving toward our dream of home ownership. What would you tell us?
Okay, I like to remind people this. Home ownership is a process. It's not a destination. Because even after you close, the process continues.
Yes, it does.
So you can't just circle a date on the calendar. It's my closing date. Everything is done.
Right.
It's one thing to obtain a home. It's a whole different thing to maintain it.
Oh.
So educating yourself on the process of being a home owner, not just being a home buyer, is part of the holistic experience. That's why it's important who you work with and who works for you need to be able to guide you through this process so you can have confidence to make clear decisions.
So tell us where we can find you. I know that you do workshops. He has amazing workshops, y'all. So come to the workshops because he has the credit repair guy.
Absolutely.
He has an attorney, and then he does the real estate brokering and information. So tell us how we can find you.
The easiest way to get in contact with me, I had the same cell number for the past 20 plus years. That cell number is 786-525-5984. My email address is jfbunyan@gmail.com. That J as in James, F as in Frank, B as in boy, U as in umbrella, N as in Nancy, Y as in yo-yo, A as in apple, N as in Nancy, @gmail.com. That's the best way to get in contact with me. I also have a website, jamesbunyanservices.com. So just reach out to me. What I'll do is just have a phone consultation with you to find out and advise you what your next step should be. Whether you're a first-time home buyer, looking to buy that $1 million home, trying to buy a strip mall, I have access to all the resources to make you become that homeowner or that investor that you need to be.
All right. So again, I am Dr. Carolyn Edwards. Thank you, Mr. James Bunyan, for coming. We're going to have him back. And remember to get your life because everybody else's life is taken. Live your best life today. And we'll see you next time.